Hello guys, today's video is about 3M. 3M is an industrial company, uh, is a really big company in the industrial side. Uh, Everyone knows 3M, and in the last few months they have been difficulties, legal problems. Um, so these legal problems maybe did get us an opportunity to buy 3M at a cheap price. They are trading now around $100. They are trading around $104. Um, they are in a 52-week low. Um, it's a really well-run company. I really love it. They have a wide moat, and it's not every day we have the opportunity to buy 3M at this price. In the last 5 years, they have been trading around $200, $250 in 2018. It was their maximum. Now we are trading at a discount. So things we like in 3M. 3M is a industrial company. They provide a lot of service. They have a lot of products. It's a really big company. Their market cap is around 57 billion at the moment. They are trading at a PE and forward PE around 10, 11, which is really low, especially for a company of this caliber. Their gross margins are around 43%, which is really high for an industrial company. Their net margins are around 17%, really high for an industrial company. They have almost 4 billion in cash and 40 billion in debt, so they have net debt of around 10 billion. For a technological company, this is bad, but for a company, an industrial company, which have a lot of factories, plants, they have that's acceptable. I'm not preoccupied on that. I'm not too worried. They have a return on equity really high, 40%, and the return on investment almost 20%. This is really good for an industrial company. There are not many industrial companies at the moment that had this return on invested equity and invested capital. Their net debt is manageable, so for an industrial company. So they have a dividend yield of almost 6% at the moment, which is really high. Maybe not sustainable, but I believe it. They are a dividend king. So their performance year to date, they have been down. Maybe this is an opportunity. So I took I took this opportunity to start a position in this company. And I will tell you why. They have a wide moat, a really wide moat. There are not many companies that can they can do the same products. They have a lot of patents. So they have a wide moat. So their revenue growth is not increasing a lot. This has been stable around the years. They did grow a lot in 2021, almost 10%. But in these last years, their revenue is down 3%, and they are expected by analysts to be down 7% this year. But it's a boring company, but they are still growing. They have a high return on invested capital and return on equity, which is important for an industrial company. They have low debt, manageable debt for an industrial company. They have been free cash flow positive every year. They have been distributing their cash to the shareholders. They are returning capital mostly by dividends, but they are doing some buybacks. So, do they have a fair valuation? Their low P should be can be a value trap. Let's see. Let's do our assumptions. So let's do a discounted cash flow analysis. For my base case, 3M is a really stable company. So for my base case, I will assume 70% margins, which is the margins we had in the last 3 years, around that. So since we have been, since we are expecting revenues to be down this year as well, in 2023, and for 2024 only go up 3%, I'm expecting 3M to grow around 7%, around inflation, maybe a little bit higher, but they have to recover these last two years. So since 3M is a well-run company, I will use a P of 17. I can do a P like that for a well-run company and a stable company like 3M. So I'm expecting for my base case a discount rate of 12%. For my bull case, maybe they can increase their margins to around 20%, growing around 10% and 7%, 19 PE. So if this happens, I want a discount rate around 40%. And if they have difficulties in the next year, they can grow around even just only at 5%, 3% for the last 5 years, a P of 15. Their margins did go lower to 15%, I assume. So if that happen, I believe their value will be around 92. It's my value. So 3M is trading around 104. I did start a position around in this week, because I believe that's really difficult to buy this company at their value. I'm hoping that 3M goes down, the price of 3M shares go down. If it did go down, or if it goes down under 100, I will be adding to my position. It's a small position nonetheless, but this is a company I really like. It's a well-run company, wide moat company. They will not be growing a lot, but they will continue to grow. I think they have good products. So a company of this quality, around trading around fair price, that's, let's talk about my value is 92, but we have some margin of safety though. So if you did take my margin of safety out, maybe 3M intrinsic value will be around 110, maybe 120. So 3M should be trading under their intrinsic value. So this is an opportunity to buy. I really like the company, and I'm expecting that they will trade even lower. I'm hoping for that, so I can add to my position at a cheaper valuation. So that's my thought on 3M. I hope you like it. I hope you find it useful, and if you like it, subscribe. Bye.